Hello guys, welcome back to my channel. A quick one. I really just want to show you the setup of yesterday, one of my analysis yesterday night. So I went on VIX 100 1x. So I went from 1 hour. I was able to spot this point of interest. This is my point of interest. So I was waiting for market to get to that point of interest. You can see this movement from here. From this point, market didn't get to the point. It doesn't enter it from here as well. It doesn't enter it. Let me show you. From here, it doesn't enter. You can see. So from here as well, it doesn't enter. So I want it to tap into my point of interest. All of these are just liquidity. I just liquidity build up. So now market came here and tapped into it. This was where I got an entry. Not really much, but then I was able to spot an entry. So how do I get that? Let me show you right away. So after market tapped into it from the 1 hour time frame, so I went straight to my 5 minutes. So this was it. Then I was able to spot a low that broke the structure. For every move on each time frame, which is a trend, for every move on 1 hour time frame, it is a trend on lower time frame as well. So now this is a break of structure. Market broke the structure and tap into my point of interest. So let me show you. Market moved from here, broke structure, then tap into my point of interest. Yeah, this is the tap into my point of interest. So I spotted the low. This was the low that caused the break of structure. So I marked it that once the market broke this low, that means my endorsement has been grabbed, right? Endorsement has been grabbed, and I will be waiting to short or to long the market based on the market reaction. So if I'm waiting to short the market, then that means there won't be a break of this high, right? So if I'm waiting to short, that's if I'm waiting to short the market. If I'm waiting to long the market, so there will be a sign. There would be after this tap, then after market break the structure, that was where I will be waiting to short or to long the market. After market break the structure, then I will be waiting for a pullback. So it is that pullback that will give me the leverage. It might just be a candle, but I will leverage on that, and I will enter for a buy signal. So now waiting for a sell, right? Because the direction of the market is in a bearish movement. So I was like, okay. So then I went straight to 1 minute. So let me quickly go through 1 minute. So this is it on the 1 minute time frame. On the 1 minute time frame. So now let's analyze the market from this low to this high. So we have this low, right? This is the candle that broke the structure. We have this low, we have this high, right? So after market broke the structure, came back down, then we have this high, this low, we have this high, this low, this higher high, and this low. This was the recent low, and this is the recent high, right? So I was like, okay, if market break this low, then I'll opt in. If market break this high, I'll opt in for a buy. I look for where to buy actually. So then once the market broke the low, right? When the market broke this low from this high to this low, there was another block. There was another block around there, so that it little bit fair value gap with an it's just a little bit. Yeah. So this is 1 minute time frame. You have to be smart. So I didn't look at that, but because my goal is, that means there is a week of this upward movement. Market didn't really break the structure. It was like a liquidity sweep. If you go to 5 minutes, it was like a liquidity sweep around there. So sweep this liquidity that was resting around there. So market came down. Then break this candle, break this level with a big momentum. Yeah. So that was where I opted in. Pam pam pam. As I opted in, this was my stop loss. This was my stop loss, and here is my take profit. So, and if market break this low from the 5 minute time frame that I drew this, so then I am going to opt in for more sell. So let's see how market reacts. Then you can see market tapped into the TP and then breaks, move to the upward direction. So how do you know that there is a weakness in the upward direction? So let me show you one more again. It is just the weakness. The strategy is just, okay, if market is going down, if I want to enter for an uptrend, I'll make sure I see a weakness in the downward direction. If market is going in an uptrend and I want to enter for a downtrend, then I will know there is a weakness in the whole. Okay, I will identify the weakness. I will leverage on the weakness of the trend. So now market was going down here. So it tapped into my TP. Then I was able to take the profit. Now I want to enter for a buy. So market is showing me, and if you understand SMC very well, after apart from order block, imbalance, order flow, so there is something called inducement. So inducement from this high to this low. There we have like 1 order flow, 2 order flow, 3 order flow, and the last order flow. So the more the order flow, the way the inducement move. This was where the inducement was resting. So it later came back here. Then finally the inducement is here. So once market break this level, we'll be looking for more sales. You'll be looking for more sales, or you wait to see market reaction for a buy. So now market here. This is it. The market got here, it went back, create a new inducement. So went back, but did not break. It was just a sweep. Market did not break this level. It was just a sweep. After market sweep this level, you hold on. It went back and break this level with big momentum. It give you an idea of, okay, market is going to move higher. So you quickly identify the order block. Once there is there is little to no fair value gap here. So a valid order block is that order block with a fair value gap, and you can see there is a fair value gap between this candle and this candle as well. The low of this candle and the high of this candle, there is a gap in between. So showing you that, okay, market is coming back here to tap into this candlestick or tap into this fair value gap. So then you opt in for a buy, and you look at it. So that the market went straight. Where will be your stop loss? Your stop loss will be around this low. So your stop loss will be around this low, and your TP will be one of these high here or here. This order flow. Yeah. So one of the highs. So after look at it, market get there and tap into our TP just like that. So and look at this this other block that I first identify. In the first place, I identified this other block, around there. So market have to, and you see market react from me. So I was expecting when market gets to that place, it will start selling. So look at it, look at that reaction to have been, but then there is a liquidity. Understand that there is a liquidity around there, which market have to, sweep or take away. But market take it away, and eventually swept the candle that take it away with this doji candlestick. So then came back. So how do you know that okay, it is time for you to enter for a sell? You see this low here, you mark the low. Once market breaks low, and try to move up and failed to go to this level that you're seeing around there. So then when there is a failure, that you identify the failure and you leverage on it. So this is where I'm going to enter for a sell. If I enter for a sell around there, my stop loss will be around there. Yeah, my stop loss will be around there, and then my TP will be this low here, or the actual low that I was expecting market to sweep. Yes. So that will be where my TP is gonna be. So then let's see what market is. Look at how market tapped into my TP. Soft guys. So this was later analysis. That's what I wanted to show you. Please do like and subscribe, and share this video if you find something interesting in it. And if you want more, please encourage us by doing the same things. Like, share, and subscribe as well. Thank you. Peace.